The business model of venture capital is such that, these firms are making, 40 some odd investments oftentimes per fund, if you will. And the view is that 30 of these things are going to go to zero. How they get to zero, they don't seem to care about, actually, because they're just going to go to zero anyway. And so as a matter of course, they're not doing the kind of diligence that you might want them to do if it was a public investment, if it was a private equity investment, if it was just about any other kind of investment, because the model is so different. What do you do about that?
Well, it's really amazing. And as Sam Bankman-Fried said this himself in his discussions with you, he said, look, when it comes to due diligence, it's not a matter of what we look at. We don't look at the products. We don't look at the services. We don't look at the balance sheets. We don't look at the cash flow. We just look, is this an idea that we could pitch to someone else and get 10x with it? And if we think that that's true, if we think this is something we can sell, then we're all in. And that level of due diligence is just absurd. It's just the wrong way to invest. It always has been. It always will be. For these venture capitalists, yeah, they roll the dice and that's how they want to do it. But I don't look at that as a reasonable way that anybody should invest. You should invest for value for the long term. You should look at concrete term things like a balance sheet, like cash flow, like a product, like a service,
but John,
like a management team.
What I'm saying is you get the term sheet, you get 12 hours to sign the term sheet. Sometimes you get 14 days after to maybe look at some stuff over. The whole business model is completely different than what I think maybe the public even understands it to be.
Well, I don't know that that's going to factor into the SEC's calculus. I agree with you. The business model is different. And to me, as I said, it's absurd, but that's how they roll. It's just a matter of, hey, can I take this and in whatever length of time I need, 3 years, 5 years, or whatever, can I get 10x out of it?
Right.
It just doesn't, nothing else matters. But from the SEC's perspective, these are investors like everyone else.
Back to investors getting hosed, though, in this whole situation, because this does concern the SEC. You just mentioned a long laundry list of the protections that did not exist when it came to oversight for FTX. What agency, who should be ashamed that we are in this situation where customers have lost their money and have no claims on anything coming out in bankruptcy?
Well, wait a minute, Melissa, as far as being ashamed, look at what the SEC has done. Look, I'm an SEC critic. I worked at the SEC for almost 20 years.
Was this completely just not their fault? I mean, shouldn't they be protected? Somebody should be protecting investors.
Well, let's look at what the SEC has done. They brought over 120 cases in the area of crypto. They've won every single one of them. They stopped initial coin offerings. They stopped lending programs. They stopped simple agreements for future tokens. They stopped Coinbase from doing a lending program before they even got started. They stopped Bitcoin spot ETF from Grayscale, which would have caused extraordinary damage. So the SEC has been very aggressive. And, they're going to be more aggressive when it comes to these crypto intermediaries, Melissa. They're Gary Gensler, the chair of the SEC, Gurbir Grewal, the enforcement director, and David Hirsch, the head of the crypto unit, have all said that these crypto intermediaries need to get into compliance, and they keep saying the same line over and over.
As a critic of the SEC, then what do you make of what do you make of the dinners and the meetings and the like with Gary Gensler, with the general counsel who's now leaving the SEC? Is that it doesn't look good? It's worse than that. It's better than that. You want them to have relationships. You don't want to have. I mean, I can see all sides of it. I'm just curious where you land.
Sure. I'll tell you exactly where I land. I would be shocked if they didn't have meetings with all these people. When I was chief of the Office of Internet Enforcement, I did that for 11 years. We used to routinely call in all the general counsels of all the big online brokerage firms and just sit down with them and ask them what we were doing right, what we were doing wrong, what they thought we were screwing up. It's very important, that sort of outreach. Now, you try not to meet with con artists and fraudsters. You do the best you can.
What about the dinner piece? Does the dinner piece matter? I mean, maybe it doesn't. By the way, I've had source meetings with all sorts of people over dinners and meals and all sorts of things.
No, I don't like it. I never did that. Okay, I never went to dinner with any of these entities. Unless they were my friends, then I went to dinner with them. And there's a fine line because, you're in the industry. But I don't like that. I like to keep the meetings official. But I don't think these are impeachable offenses. They might be bad judgment. But, if the fact that Gary Gensler, if he hadn't met with Sam Bankman-Fried or his team hadn't met with him, I would be shocked.